Afternoon all. Sorry, just clear my throat. I'm right in the middle of doing stuff, so I'm a bit late. What's the time? 23 minutes past. Oh my God. Alex, Baggy, John, Crom, hello. Excuse me. And I've just made myself a coffee. It's all go here, I tell you. We just had some news come out on the yen and the US dollar at the same time. So basically we got a little bit of a push on the yen, and it looked like we were about to get a big rally on the yen. And then all the US dollar news came out. However, it's all back to where it was. So the market's completely ignored the US dollar, all that positive news. And possibly we might be getting some strength coming through on the yen, but we'll have a look at that in a sec. So I got a back test running as well. Oh, this one's making some money. Right, let's have a quick... oh my God, I haven't even got the VPS open. Let's have a quick recap of this morning. Morning, Stefan. Afternoon, even, Virginia. So, when it loads, drawdown control today on most of the... Well, I think all of these set files, actually. When it loads... So this is hedging, H1, 0.56 drawdown control today, sitting in 13% drawdown. US dollar yen and euro US dollar are, and Aussie dollar US dollar, the only three that are actually in drawdown. Well, wouldn't really worry about that, 1.5%, or that Aussie US 2%. 2.24 is getting to the point where I'd start to think about doing some control on that, but that's euro US dollar. So we'll give today to play out and see where these get to, but 0.5% drawdown control done already. H4M5 0.68 drawdown control done, 6% drawdown. US dollar yen is the only thing over 1% drawdown, so everything else is just all within normal operating limits. There's nothing in drawdown there at all on the H1. Done 0.75% drawdown control today, but there's nothing getting out of hand at all. And ADR reversals, 0.33% done today, and nothing getting out of hand there. So we haven't banked anything today. It's all losses today, but waiting for stuff to mature, should we say. Afternoon, Brian. Konnichiwa. So news, quite a bit of news this morning. UK markets show a 72% chance that the Bank of England interest rate will peak at 5.5%. So we are looking at now, it looks like a 1% rate increase. So pound, we are sitting at 4.5. They're now calling a 1% increase instead of a 0.75. So that's quite a significant change. And then news came out afterwards. Money markets fully pricing 100 basis points Bank of England hike by December. So bear in mind, we're only in May. We've got 6 months to do 1%. Highly unlikely they're going 0.5% increments, more likely 0.25%. So it looks like we might have maybe another increase, a pause, another increase, a pause, that sort of play. So we'll see what happens. But bullish pound should be moving forward. We had some ECB news come out. We had some yen news come out. So the ECB, Villeroy, ECB has already completed most of the rate hike journey. That contradicts what Lagarde said about we've got more rate hikes coming. One says one, the other says the other. So obviously there's always infighting going on in the ECB at the moment, but Lagarde will win. So still bullish euro. DBRS Morningstar places the United States credit rating under review, basically because of the debt ceiling. This is the important one. UEDA came out and said, we could tweak the yield curve control if balance between benefit and cost of policy shifts. Read into that intervention. Potentially, they might have a little bit more of a pump on the yen. So we might get some yen strength coming through soon. We'll keep an eye on the news, but they drop things like this, and then all of a sudden out the blue, you get a 2 ADR move on the yen. So it's well overdue, so I wouldn't be surprised. US jobless claims. So the news came out on the US. Where are we? GDP was up 0.2%, which is good. Well done, US. Unemployment claims were down further than expected. Well done, US. Market wasn't impressed. So at the moment, we're not really doing anything with the US dollar. So we had under chart updates. Let me just take this test. Remind me I've got a test running. I don't want to shut that down. How many are in? We're only halfway through the test. Got another 5 hours on that. So we've had a bit of a rally off the US dollar. It seems to be going a little bit more now. No, it's not. That's Canadian dollar weakness by the looks of things. Yeah, it's Canadian dollar weakness. It's not US strength. So market really not impressed with anything on that side of things with the US news. I was expecting a little bit more movement off of those unemployment claims. Didn't get it. We'll wait and see. Morning, Neo. Afternoon, even. Right. So that's all the news wrapped up. We'll watch the open across all markets. So I've got the new version of the EA. Hopefully going to trigger and work. As you can see, I've been doing lots of testing on it this morning. There's lots of trades all over the place, so ignore all this crap. This is just trades. I've just been resetting the times so I can watch the logic play out. Logic seems to all be working fine. Let's see what happens at the open. So we're trading the pre-market 5. So the 5-minute opening range will be there. And obviously we will play the breaks of that and see what happens. So banked 9 grand this morning by accident. But hey, accidents happen. But I've lost loads of that this afternoon while I've been mucking about. So net, it's about 5 grand now. So I lost 5 grand trying to trade just 5-minute ranges, which obviously don't work. Okay, so orders have gone in. Long automatically there, closed out, which is good. Orders are in there. DAX won't trade because it's not the DAX's time. Yes, it works. Gone short on the Dow. So the Dow is gone to the downside. NASDAQ's gone to the upside. The Dow has no clue where it's going. We'll have a look at potential directions in a minute and see where the market's likely to go. Oh, don't freeze up on me. Christ. Thank you. Okay, NASDAQ stopped out on the longs and flipped short. So we're short across the board. So 1% loss there. TP hit on the Dow, 1.5 R. TP hit, runners in at 5 R. Why is there no TP placed there? Right, so that's not worked, NASDAQ. Okay, so that's placed the TP. Ah. Hang on, no. S&P's hit TP. So the NASDAQ closed out both in a loss. We have only taken 1 short, not 2. Okay, that's interesting. Just going to manually close that out. That should have been 2 trades, but that only took 1. So let me just get my notepad open. Oh, no, I don't want to update. So Dow's running nicely. We're out of the Globex lows. Evening outro. How we calculate operating limit drawdown. I don't know. Suresh, I don't know what operating limit drawdown is. Losses for days, my ninjas, hating life. You need to stay in here and start trading like a position trader, or use the opening range breakout pre-market 5 strategy, because that's absolutely killing it. Market's not impressed, just like my girlfriend. Oh, Brian, you need a new girlfriend. Let's see what this yen's up to. The market seemed to have quite a stiff reaction when that news came out from Oada. I mean, we literally just went vroom, really fast. Somebody dumped a lot of money into the yen at that point, so it all got unraveled. So I'm just got a feeling there's a yen rally coming. Right, so your 5-minute opening range is about to go in, which is there at the moment. We just tapped straight into the Globex lows on the S&P and got stuck. Same on the NASDAQ. The Dow's rejected those lows, so that's going to stop out with break-even profit by the looks of things. It's a shame that didn't take that second trade. So that should be holding a 5R short at the moment, but it's not. Figure out why that happened. Who's in there? Correcting stops because of slippage on the NASDAQ. I think that was chart lag. I don't think it managed to get that second entry on. That looks like, because the fact that it got this one of them on and not two means the EA triggered. The EA fired. It went through the script. The fact that it didn't place the second order has got to be to do with the account. Just make sure the magic numbers are the same. 202, 601, 401. We'll keep an eye on that. Good old live testing. Right, so we are 5-minute opening range breaks are in, or opening ranges are in. So there's your 5-minute opening ranges. So if you're trading NASDAQ, you're short. Dow, you are inside bar at the moment. S&P, you are still inside bar. So let's have a quick look at where these are potentially likely to go today. So the Dow, we're at the lows, aren't we? So with the Dow, basically, we've broken all the weekly lows. So we're out in no man's land now, sitting in this propulsion gap, which looks like they're buying this up at the moment. So targets really are anywhere to the downside from here. So we are rolling over. This doesn't look to me like any kind of profit take pullback. This looks like just literally a wedge break to the downside. So it does look like it wants to continue short. So that's your opening range. So if we break out of that low, you're looking basically at, anywhere ADR, maybe into that propulsion gap if we can get 150 ADR today. So just moves to the downside, really. We haven't had a pullback now for 2 days. So just bear that in mind, that we haven't had any kind of move or retracement on this big drop that we've had. So there is plenty of potential for a pullback as well. So it could go either way today. But if we break out of this low here, update. Real bad chart freeze, isn't I, at the moment on this? Update. So if we break out of this low of the day, which is a Globex low, which we are literally bouncing off right now at this 5-minute opening range, there's nothing to stop this. So this could be day 3 down. NASDAQ. We got a gap fill today on the NASDAQ. Yesterday. I didn't see that. I didn't even look at the NASDAQ yesterday. Huge gap up on the NAS. Of course, that's from today, isn't it? That's the NVIDIA earnings, isn't it? So we've gapped up on NVIDIA earnings. Yeah, sure, it's a gap fill, isn't it? So we may well just come straight down and do that. We're rejecting yesterday's high, which is the current high. So let's go NASDAQ. So NASDAQ's out the low. So looking for down here, basically. Low of the day yesterday is down there. Yesterday's low or the previous day? Yeah, sorry, it's yesterday's high. And that is the previous day's low. So this area down here, which is within ADR. Why have I not got ADR on here? Why have I not got ADR on here? So ADR is basically in that propulsion gap. So ADR is within previous day's high. So all falling out of bed very, very nicely. So S&P is on its way to its 5R. This has got a 300% of the opening range trailer on it. This one's got a 200% of the opening range trailer on it. So I'm just testing trailers. Nice breaks. Nice money again today. So we banked 1, 2.5-ish, more than that, 2.8, lost $1,000, 900. So call it $2,000. We missed one on there that should have taken a trade, which would be sitting in 1,500, and we're sitting in $2,500 in profit. And banked $9,000 this morning. Happy days. Right, we'll let those play out. Let's have a look at where we are today. So we've only had one ADR today, oil. Nothing else has hit ADR yet today. Bit of a quiet day, which after yesterday's New Zealand dollar craziness is not not to be unexpected. So we've got ADR here on the propulsion gap on oil. This thing's absolutely collapsed today. We really, really tried to get out of this high. Wasn't able to. So we broke the high yesterday. We held and then we dropped and then we tried to rally back up. We gapped up a little bit this morning, but it's collapsed again. So looks like this is holding this propulsion gap. They're not letting this back up out of this propulsion move here. So this week-long accumulation, they suddenly slammed and broke through it. This is where they started selling hard. Every time it's been attempted, they've pushed it straight back down. This is the biggest, strongest move we've had to try and get back through that level. And it's looking like it's failing. But if you look at the pattern that we're forming here, potentially, not that I do trade trend lines, not that you can actually see that trend line. But this is an ascending wedge. So where we are here is potentially the contraction point for breaking out of this level. So we are contracting. It hasn't broken yet. If it gets back down here again, we're back in this range. So we're stuck again, which opens up the door for shorts on oil and meaning that we're not going to get this rally that we're looking for. I really don't know what's going to go on with oil. The dependency on oil hasn't really waned. The barrel demand has gone up by millions of barrels a day. Supply is constricted, so there's no reason why this shouldn't be flying. It's just not able to get there. So we need a good war. War needs oil. US needs a war at the moment because it's got a debt crisis. So maybe this is all linked. Who knows? Conspiracy theorists, off you go. So yeah, nothing on ADRs, nothing to look at there. The weeklies, obviously, we've looked at multiple times because they've been lit up most of this week. And yesterday, obviously, we went through all of those. RSIs, we looked at all of these this morning as well. So we'll whiz through these, but they're mostly the same as they were today. So we'll see how we get on with these, but there's a lot of sideways movement at the moment. 4R locked in on NASDAQ outro. Good man. I can never put that fib on the right way round. One day, I'll do that right. 4R, there you go. Lovely. 5R is where I was targeting. So yeah, that's good. So outro, by the way, if you haven't been in here for a while, I'm running lots of analysis on the 5-minute pre-market. My findings are 1.5R and 5R. 4 to 5R are the most profitable with the smallest drawdowns. If you're using a trailing stop, that holds true as well. 5R, 4R, and a 1.5R. I'm running a new test at the moment, which is testing all of the levels above 5R. So it's a basic continuation test of this. So the optimal trailing stop is 300% of the opening range. So this is just testing, I think I was testing 100 to 300. No, 200 and 300. What was I testing? What was I testing? Hang on a minute. Trailing stops. 200 to 500 I'm testing as a trailing stop, but minimum 5R plus. So I'm going 5R to 10R return on the second entry and 1.5R on the first, just to see what I can get out of it. So far, drawdown is not increasing. Profit is massively increasing. I'm only halfway through the test as well. So yeah, all looking good. Test running. Stopped out on that Dow trailing stop back in propulsion. So this is where the trailing stop obviously does help you. If this now is a false breakout and we're going to fly to the upside, I'm happy. But I'm done today on the Dow, and I'm done on the NASDAQ, and I will be done on the S&P when that triggers. So overall, nice profit today. 2 to 3 days like that a month is all you need to bank 5 or 10 grand in profit out of a prop, out of a 100k account on prop. All you need. Look at what we did this morning. Admittedly, we were trading the US indices during the Frankfurt session, which you don't normally do, but it's still banked 9 grand across the 4, and it's only risking 0.5%. So, happy days. Right, Aussie dollar CAD. Sorry, let me just catch up on the chat first. Looking forward to seeing the finished product. Yeah. Nazir, on the 29th of March, I took a sell on the pound US after some profit. Price went up and up and up. By 10th of May, I was 50% down. I learnt your drawdown control, recouped all my losses. Today, my initial trade is coming to break even. 50% drawdown? You're over leveraged. If you're getting anywhere near 50% drawdown on your account, there's a problem. That's it. Shouldn't be that far in drawdown. But you recovered it with aggressive drawdown control. So well done. Lesson learned. But scale. 29th of March you got in. So you got in there somewhere. And by the 10th of May, somewhere around there, you see that movement there, you shouldn't be anywhere near 50% of drawdown on that movement. That is 350 pips on a 94 ADR. That is a 3 ADR move. Maximum positions you should have on that is 6 at the very, very most. Maximum. You can't get into 50% drawdown on 6 positions unless you are massively over leveraged. If you're scaling in at half an ADR apart on a 3 ADR move, the maximum positions you can have on is 6. That is assuming you're a reverse alert at half an ADR every time, which you're not going to get. Something's gone wrong there, but you got out of it, which is good. Aggressive drawdown control position up there. You're way out of it now, aren't you? Out of it and in profit. Theorists. Don't know what that means. Right. Aussie dollar CAD. So we are still extended on the 4 hour. We are extended on the hourly. Only down to the 30 level on the hourly, but we are extended. So we've not really gone anywhere on. I'm going to whiz through all of these Aussies and all these New Zealands at the same time because they're all the same. We obviously have had the big drop based on the New Zealand move. We haven't really gone anywhere. We've kind of ground down today, but look at the candlesticks on this. The candles have been like that. All the candles have been like this. So basically, the market is kind of in equilibrium. There's still more selling pressure, but there's no massive advantage in either direction. So Aussie CAD extended, Aussie Swiss coming down. The Euro's obviously pumping at the moment. Big push on the Euro at the minute. Aussie Swiss coming down. So that's extended to the downside as well. Nicely extended. As I said this morning on this one, likelihood is that is where we're going to bounce now. So you're looking at 125, 150 ADR move from where we are here. Before you get a bounce on that, it might just pull back at any point. Obviously, it can pull back, but there's literally no support resistance to the left here anywhere until you get down to here. So may well fall all the way down that one. Aussie New Zealand. Extension to the upside. You see, this is why I don't like trailing stops. We know the market retests propulsion at the open. It stopped me out, and now it's going to go down and hit my target, the same as it did yesterday. S&P is going to prove my point. Look, this one's got a tight trailer on it. This one's got a loose trailer. This one, it's 5-1, and this one doesn't. Trailing stops. Aussie dollar, New Zealand dollar. So this is coming up into potential resistance here. So we're up at the 72. This is a downtrend. We are expecting a continuation to the downside on it. So looks good for short entries. Nicely extended above on ADR. Aussie dollar, US dollar, same thing to the opposite side. So just done some drawdown control on this one this morning. We are still pushing down. US dollar strength. Looks like it's, US dollar's powering up now off the back of the news. No, it's not. This is a Canadian dollar weakening. It's not powering up. Aussie dollar, Aussie dollar is obviously coming down, isn't it? More weakness on the Aussie, really. So yeah, big drop on this one. Nicely extended down here. We don't get down to this level very often. We are... the hell happened there? Where's my chart gone? What was that? That was weird. Okay. No idea what that was. Weird. What did I click then? Just vanished. That's probably me, sorry. Aussie dollar, US dollar. The RSI is up again. Where are we? There. Yeah, so I was trying to zoom out. So there's not much, we don't get down to this level very often. We are down at pretty much 15 on this. The problem is there is nothing here at all but propulsion moves. So this area here over on the left, there's multiple wicks here. Any of these can be reactive after a move this strong. So the market's going to look for an area to buy and start to scale out of this position. So it's very difficult to pick a spot. You can see where we are at the moment. We're kind of here. That wick there, that wick there, and that wick there. So there's these areas, going down to sort of 175 ADR, but there's just nothing to stop it really at the moment. So it's just a case of hang on and hold on and see what happens. If this US debt ceiling thing doesn't happen and everything collapses around their ears, this thing's going to fly. So we're waiting to see what happens with the US, but at the moment, not doing very well on that one. So that's extended. There's 2 positions on that on the hourly. One on there, one there. Obviously, the average is down here. So the average is well within an ADR. We've only got 2 positions on it at the moment, but difficult to pick a spot for a bounce on it. But look at the speed and size of this movement. We are looking at 160 pips off of a 65 ADR. So this is nearly a 3 ADR move in 2 days. This thing's got to pull back. They're going to need to take profit on it at some point. So we'll see when that one starts to ease off the gas a little bit. Euro odd, nicely extended to the upside. Again, Euro should be bullish. We did have some negative comments coming out this morning. Some earnings just come out. Best Buy shares rising. Not sure what index Best Buy is in. Don't think it's in either of those because nothing's really popping, is it? So the news that we had for the euro today was basically from Vilroy saying that the ECB has completed most of the rate hike journey. If they only told us what the journey's terminus was, we would know how much further we got to go. But they have said, well, Lagarde has said there's more raises to come. So we should be looking still bullish euro. So at the moment, this is very, very extended, obviously, above there on the 4-hour. Hourly, we were extended up there. So that was the initial entry. We'll be taking a second on it. If it rallies, next stopping point is somewhere up in this accumulation. So still got further to go. So it's either going to flag, break up into there, and then we're going to retrace, or we are just going to roll over and come back and retest these areas down here in that propulsion gap. If that happens, obviously, I'll be out. So that's euro odd. Euro New Zealand, pushing at the moment, 2 positions on that one, still going, Euro New Zealand. Everything's still going against New Zealand at the moment. The market really doesn't like it. Propulsion gap target there, and obviously there's a high up there as well. So that's where we'll be aiming for. What's this fib? Okay. So yeah, pushing up at the moment. Targets up there potentially if it's going to continue. But I mean, if it gets all the way up to there without having any kind of pullback, we're looking at 670 pips. This is 161 as an ADR. So that's at 3, 6, kind of like 5 ADR move with no profit take. And if it does get all the way back up there, fine. It's going to come down really hard, isn't it? So we're going to get that sort of movement, 50% retracement, and the 50% retracement will be an ADR hit. So just hanging on, waiting to see whether they do it now and then bounce back up, or whether they're just going to rally up to the highs and then drop it. Euro, US dollar, again, 4-hour RSI extension to the downside. Still got that strength on the US at the minute, a little bit. So we're at this low, which is just above propulsion. So this is potentially a decent bounce point, but it's very, very orderly on the way down. Yeah. So just push up. So that is an H4 M5 entry. We haven't had an hourly extension on that yet. The last one was back here. There's 2 trades spin on this one, as we looked at this morning, there and there. Both worked out fine. So it's just a case of waiting for the pullback. But at some point, we'll be coming back up to test these propulsion gaps. And again, when that US dollar weakens, but you know, if the Fed keeps saying they're going to pump interest rates, maybe it is going to continue to rally. We'll see. Pound odd, 4-hour RSI extension to the upside still. Again, this is just kind of still rallying. 2 nice resistance areas coming up at 125 ADR. So just scale in second position, bring the average up, wait for the pullback. Hasn't had a profit take at all on that move yet. So any of these type of movement, we're just waiting for the pullback. It's just taking a bit longer. Pound New Zealand, that's the one that's going like a steam train at the moment. So we are up at resistance. So done one drawdown control on this one today. This is your monthly high. This is the 3-week high, which we're up at the moment. So this is where I would expect to see some selling start. We've had nothing, obviously, off of the New Zealand initial drop. And we haven't even had a flag on this. We literally just accumulated for 5 candles and we're off again. So it hasn't even flagged. So yeah, off the charts, this one. So just waiting for some kind of pullback on it. Pound, obviously, we've had now notification that there's a potential 1% increase coming in interest rates over the next 6 months. So that's bullish pound. Again, bullish euro, bullish pound, potentially bullish US dollar. So everything that we're getting into on these extensions, we're having news coming out telling us that, yeah, probably going to continue that way. But it won't continue that way forever. It will pull back before it continues. That's where we get out. So just waiting. Market's just squeezing a little at the minute on all of these. And the New Zealands we know about. So all the New Zealands extended, all extended on the hourly, all extended on the 4-hourly, embedded. So we are now embedded on the RSI down here. So typically when we get embedded, we have a pop very, very quick. So we'll see when that's coming. Just waiting. Again, massive extension. No support on this one either. We've just broken the monthly level, which we got to this morning and didn't get the bounce. So that's gone through. There's nothing on the way down here at all either. So you can see where the propulsion moves were. That is your next real support, which is absolutely miles away. That move with no profit take on it, there's no way they get in there before they pull back. So even if it is going to scream down, you know, we'll get some kind of profit take move on it. It might just start to go like that. If oil doesn't rally, then Canadian dollar is not going to be strong enough to drive this any further down. And the New Zealand, as soon as it picks up a bit of steam, we'll be able to get back up there. So again, waiting game with all these New Zealands. I said, didn't I, when this news came out, one or two things is going to happen. It's either going to start a 3 to 5 day drop, i.e. this move is fundamental shift and it's going to continue, or they'll just do a V-shaped recovery at some point in 2 or 3 days, possibly even in a day. But the move was too big. You're not going to get a 300 ADR move down, then a 300 ADR move up. It's just, the market just doesn't do it. So more likely we're going to pull back, I think, and do something along those lines gradually. So just make sure you're scaling in, ready to get out when the move starts. New Zealand dollar Swiss, same thing, double bottom coming up, monthly low coming up. So potential bounce point here, back up into propulsion. If not, waiting for 175 ADR for the bounce. New Zealand yen, same thing. Yen, this one might actually bounce faster. Sorry, might not bounce faster because the yen, if this yen strength comes through, obviously this is going to drop further and faster. So got 2 good support levels coming up down here. If we are going to continue market structure on this, yeah, it's very straightforward. This is your higher low. So this should be where we bounce from. That is obviously if it's going to continue bullish. So 72.24 zone, buying out of that. But that depends on the yen. And New Zealand dollar, US dollar is at the lows. 2 positions on that from the hourly RSI extension. That's embedded. Again, we'll get a pop. So target that as your initial target at the moment. That's the last propulsion gap. That's in profit. If it continues to push down, scale into another one, there'll be another propulsion gap form, target that one. But ultimately, we should come up and retest that area at some point, even if it's going to continue its movement down. But again, this US dollar, totally schizophrenic at the moment. We keep getting completely mixed messages on it. We're not going to go above 5. All right, we might go to 5.25. We're not going to go above 5.25. All right, we might do 5.5. It's like, make your mind up. Are you going to default? Aren't you going to default? Yeah, it's very difficult to pick a direction on the US at the minute because every week it seems to have something completely new that changes the direction of it. So, but as you can see with most of these US dollars, they're sideways. It's really not able to get any traction in any direction. Things like the Swiss franc are beating it at the moment. You know, it's just not got the legs, is it? So we will see. US dollar CAD's also extended. That's extended on the 4 and the 1. So big push up at the moment. It's coming up into weekly resistance. Monthly resistance is also coming up as well. That is also ADR. So if we did manage to get an ADR hit on that today, you've got 2 solid ADR days there. Push back down into that propulsion, which is that high, possibly for a continuation long. Again, oil's not helping with that. And US dollar yen off the charts. Now, US dollar yen does do screaming rallies like this, which is one of the reasons a lot of people just don't like trading the yen. So big, strong push potentially on the cards. When you get these big rallies going in like this for weeks on end, the Japanese intervene and they have enough and they drive it back down again. So this is the next potential leg up on this move down. So that's what we're witnessing at the moment. The Japanese have Oeda's come out today and sort of hinted at might be able to do something, i.e. it's getting a bit weak, we don't like it, we're going to push it back down again. So they will do something. They won't let it get back up to 150, certainly not. So we're not getting back up there, but where are we turning? So H4, obviously your initial entries on this were here. The H1 strategy's out already. H4 obviously is still in this, so with multiple positions. So it's just a little bit of a squeeze at the moment for a few weeks, waiting for that pullback to the 24. The further away you get from the 24 moving average, the more likely the pullback becomes, because when the market has stretched so far away from what it normally does, you know that something's coming. So, you know, these extensions you get where they just go into an accumulation and then take another leg up. Typically, if you're going to do that, we don't get more than 3 legs before then we start a shift back down the other way. And that usually is a 50% retracement on that initial 3-leg move. So at the moment, we're kind of 1, 2. This is probably the 3rd. So likely to come back down into that area there, or just a 50% of this move whenever this move finishes. This could be it. We don't know. So we'll wait and see. But that one obviously extended still up there. And obviously we're extended on the... Oh, we were extended on the hourly. We're not anymore. Out. This is why I love the hourly. You just get out quicker. I don't know why I traded H4 for such a long time, because I was really scared, I think, about moving away from a stop loss. You initially think this is going to hurt at some point. So you go with the slowest time frame. The hourly is just so much nicer to trade. You know, so it's just makes it a lot easier since I switched over to the hourly, just to get in and out of these trades, because you're scaling in and you're scaling out faster on these sort of smaller moves. Whereas with H4, we're targeting more, we're getting in a bit further apart. Everything's slowed down a lot more. So when you get these squeezes, you tend to be squeezed a little bit longer. So H1 is now my favorite time frame. It's all the same stuff, it's just a bit quicker. Do you have had an ADR alarm in New Zealand dollar Swiss? No. No ADRs today. That's confused me. That's in the wrong place. So no ADRs today, no. New Zealand dollar Swiss is 46 out of 57. So not far away. Your broker, if you've had an alert on this, that'll be because your broker has spread you big here. So that was the close yesterday. The broker opened here. So if your broker's spread went up to there, for example, obviously your ADR will be measured from the high of the day down to the low. So if the wick on the candle at the spread was higher, you may well have an ADR. With all the New Zealand dollar pairs are the ones which always have the biggest spreads. We always get the biggest spreads on all New Zealand because we're swapping as the market opens in New Zealand. And there's very light liquidity there. So New Zealand is the first market to open in the world, which is what determines the start of the Asian session. You always have light liquidity. US is shut, London's shut, brokers swap. So there's very little in the market. So the New Zealand dollar is always the currency that has the worst swaps and the worst spreads. So that'll be why if you've got an ADR. So always look at your New Zealand pairs. Whenever you get an ADR hit, open up the chart, because sometimes I've had half an ADR in spread, and you look at it and go, that's not an ADR. I've said it in here before. I've looked at these and gone, that's not an ADR. Forget it. It's nowhere near. But they still work because, 58% of the time the market stays within ADR. So if you get an ADR hit after a spread, likely you're not going to hit ADR. You're going to pull back anyway. So they still work. It's just obviously it's not properly extended. So right, let's have a quick look at the indices. Indices have got stuck. So the Dow is now pulled back into the open, rejecting. NASDAQ hasn't made any progress back into propulsion. Neither has the S&P. Obviously, DAX is sideways at the moment. So still in this one, short. So this is either going to stop out in profit or it's going to hit 2.5 grand target. One or t'other. Anybody got anything else I want to look at? Any other pairs? Anything else to discuss? Somebody just said they've just tried to use the opening range breakout EA. And their broker only allows one lot size. Change broker. The Dow looks like it's putting in a nice structure break here. So lower low, lower high, looking for lower low. So it's good short. Good short on the NASDAQ as well, probably. Nat gas, don't have nat gas. No idea. Natural gas. Probably the same as oil, isn't it? I don't know. I don't even think I haven't got a ticker, I don't think. I don't even have the ticker. Got oil. That's it. Nikkei, don't trade that either. That's the wrong time of day. Oh, I'll do it. John Wick. Okay. This morning you mentioned how you fund your account with 10K, but you treat it as 35K, if I understood correctly. Can you elaborate? Yeah, I'll do that. Let's have a quick look at gold first. So gold, we will be coming down at the moment because the US dollar has had a pop. So we've got out that low. So this range that we've been in, this monthly range. So there's your last month's high, last month's low. We basically established that within a week, and then we spent the entire month literally just mucking about inside it. Just broken out to the downside. So this is obviously US dollar strength rallying this down. We've got an ADR hit on gold today as well. So we're below the 72 now. This was the support that was holding up this range, which has now kind of failed. So this is either a false breakout, and this US dollar strength that we're seeing off the back of these unemployment figures is not going to last. And we're going to rally back up into the range, or we are starting to roll over on US dollar strength, in which case there's not a lot really to stop gold until we get back down into this support, unless something changes fundamentally with the US dollar. And obviously at the moment, the US dollar seems to be changing its mind on where it wants to go every time the wind changes direction. So it's very difficult to tell with gold at the minute, but we've just broken out to the downside. And as you can see, it's rejecting. So we've dropped on the news down to ADR, and it's trying to rally back up into there. So when it hits that propulsion gap and this level of support, which is yesterday's low and the previous day's low, and obviously this last week's low, either it's going to hit that level and they're going to add to it and it's going to drop, or this is a false move on the US dollar and we're just going to rally back up into there and the US dollar is going to weaken. Obviously, if there's problems with this debt thing, the US dollar is going to weaken anyway, and that's going to rally. So news-wise, tomorrow we've got PCE, I think. Yeah, PCE tomorrow. That's the only news we've got coming up now for the US. We got CPI for the yen tomorrow morning as well, so just be aware of that. This is orange news. But when the CPI figure is released, it could well prompt Ueda or someone else to come out and say something. And if that happens, obviously we may get a bit of a rally in the end. So we got no news coming up on the US really until, I think it's Thursday next week, is it? Wednesday. Rubbish. Yeah, so it's unemployment claims next Thursday, and then obviously the unemployment rate next Friday. So this is the key here. That will probably determine whether or not they decide to do another interest rate hike. If that remains the same, or for any reason unemployment drops, that rate hike is on the cards, which will rally the US. So we've got nothing really on the US to give us any guidance until Friday next week. So from a gold perspective, that's the sort of week I would expect, really, from now until Thursday. Thursday gives us a clue as to what's going to happen on farm. So look at that pound New Zealand. That thing just does not stop. ADR. We are off. New Zealand dollar Swiss weekly range. So this New Zealand dollar is also coming down still. Or is it? More likely Swiss franc strength and euro strength, isn't it? Euro strength. Euro New Zealand. Yep, so I got two shorts on that off of the H1. One there and a second one there. Still rallying. So, like all these New Zealands, it's the same story on all these New Zealands. Some point, a retracement off of this New Zealand dollar drop, off of the interest rates. It's just bizarre. I don't know. I've missed. I every now and again you look at something and you go, have I missed something? This New Zealand dollar, right? We're at 5.25. They forecast 5.5. Right? They've been selling off the New Zealand dollar into an interest rate hike. You get the interest rate hike as expected, which is bullish, and it drops like a stone. It's like, that is bullish. This is the highest interest rate you can get on your money anywhere in the world right now. Why is it weakening? It doesn't make any sense at all. I don't believe this move. I really don't believe this move. So either I'm missing something and I've missed something, or the New Zealand dollar is just collapsing for no reason whatsoever. And if that's the case, it's all coming back. So with the fundamentals on it, it's all bullish. Buy a scorecard, New Zealand dollar. It isn't great, but it's not bad. It's negative mainly because of retail being long on it at the moment. I'm not surprised they're long on it at the moment, to be honest. So this all just looks like a temporary move, but it is very aggressive for a temporary drop. It's a squeeze. It's a proper squeeze. So I don't know, Ian, but it's short at the moment, and I'll stay short until I get out of it. And obviously well within an ADR. You know, after a move like this, it's going to struggle to put in multi-ADR days because it's just not going to have any legs left. They're going to need to take profit on this thing soon. They haven't done it yet. So it'll come down at some point. Alan, your propulsion bar indicator, is that the WRB hidden gap? It's sort of, yeah. It's based on it. So it's a variant of it, basically. I just redid it so that it didn't all the old ones, basically, it makes it clearer, just makes the chart clearer. I wanted to basically open the chart and go, which way has got the most targets? And when you've got loads of blue all over the place, it just made it confusing. So any old propulsion gaps, which are all targets filled and hit, are all grayed out. But it's basically the same principle. But I want to see them all as well, all the propulsion gaps, rather than just the ones which are conforming to wide range bar theory, if you like. Afternoon, Andres. Aircraft tomorrow. Hold on to your seats. Yep, tomorrow is the can't remember what it's called, but it's whatever it is, excluding aircraft news. If you're not regular, you won't know what we're talking about. But Fidel Crest don't allow you to trade through a news event tomorrow, which doesn't even appear as a yellow event on the Forex Factory calendar. And it's to do with purchasing of stuff that doesn't include aircraft. How can we learn more about the Forex market? Well, that's a broad question. Baby pips, the internet, artificial intelligence. How do you normally learn stuff? I don't know. Start on my website, right? Go to the free trading education, look at all the free trading education videos, then do the bootcamp, and then start making some money. That's the best advice I can give. We were holding these lows. We're just about to break the lows on the S&P. The NASDAQ is also looking like it's going to want to try and rally another leg in. And obviously, if the Dow is going to put market structure in, we should be looking at a drop from there. So it looks like if you want to take a breakout, that level is a really nice pending level to go short. For your information, Monday is no bank holiday in Germany. I'm not here. It's a bank holiday for me. I'm not here Monday. It's a German bank holiday. Monday is no bank holiday in Germany. It is according to the Forex Factory calendar. But then again, the Forex Factory calendar said it was a bank holiday the last bank holiday. And it wasn't a bank holiday. It was a holiday, but the banks weren't on holiday. Is that what you're saying, Stefan? That the banks aren't on holiday? In which case, the DAX will be open. The Frankfurt Exchange is open. We had a massive day, didn't we? That day that it was a bank holiday in Germany and the banks were open, the market went through the roof, didn't it? So Monday might be a day you want to hold on for a 10-hour long. I don't know. I'm not here, though. I'm not trading. Holiday. It's a holiday everywhere, Monday. So, yeah, there's no trading at all on Monday. GN hit monthly high. New Zealand dollar yen weekly range hit as well. This New Zealand's really collapsing. Just done some drawdown control on Euro New Zealand. GN. Yeah, so there's the monthly level on pound New Zealand. So that's last month's high. And ADR. So there's your first ADR hit of the day. Pound New Zealand. There you go. So I'm not going to take a position there, obviously, because I've only got 2 on it. But looking like potentially where we may well just either do a little liquidity sweep and collapse, or we're just going to find limit orders trigger here and we get a bearish engulfing in and off we go. There you go. Pound odd weekly range hit as well. So still decent, really decent moves on these pounds as well. Trying to actually, it's not, is it? It's not the pound. It's all the Australasian pairs. So the Aussie coming down and the New Zealand coming down. That's basically what we're seeing. Have we had some news on commodities or something? Collins is speaking at the moment. Just started. Right, 1 sec. Right. Sorry, yeah. I was just doing too many things at once. So yeah, all these Aussies coming down hard, aren't they? Weekly level on New Zealand dollar Swiss is just been hit as well. So all these New Zealands, I get the feeling, you see, like that's the initial entry on there. Haven't had a second entry on this New Zealand Swiss. We haven't had a reversal alert. It's been dropping that fast and that hard. Look. So next alert on that, I'll be into second position. It's only 30. Yeah, that's 45. ADR's 57. So it'd be a second entry going in on the New Zealand dollar Swiss off this weekly level if we get a bounce. So hopefully we'll start to just unravel all of these tomorrow. But at the moment, all still going doon. For your information management, go to Baby Pips and then do the opposite, Brian. Yeah. Exactly. Go to Baby Pips, learn everything Baby Pips says, and then basically flip on its head, do the opposite to what Baby Pips said, and you start making money. Do you have pork scratching futures? I haven't, Tim. No. Apparently, correlates inversely with Bonneville toenails, bovine toenails. Great for pairs trading. Cows have hooves. Very funny. Just open my Robo Forex account. Great leverage. I don't know what I was missing with my 1 to 30. No, you don't. You don't know what you're missing until you get it. 1 to 30 is impossible. I don't have a problem trading 1 to 30 with my S&P 500 account. My pension account basically is on a 1 to 30 with Darwin X. I don't have a problem trading that. Something's changed on my terminal. Yeah, I don't have a problem trading 1 to 30 at all. However, not for position trading. If you're using a stop loss, 1 to 30 is more than enough to trade. But you can't with position trading. So my S&P account, which I was on the verge of pressing the button this week, actually, I'm getting back in. So I've got an EA that I run. It's basically the market reversal alerts EA, basically in a simple form, but it is a long only. So it's market reversal alerts, if you like, set to long only, trading on the 4-hour chart, and it just buys RSI extensions to the downside. And I basically just buy the dips constantly on the S&P, and it just makes money over the year. I was on the verge of turning it back on this week, and I'm glad I didn't, because I'm still not convinced that this is back into a bull market. When you look at some of these other indices, like the DAX, it looks like we're back in a bull market proper. And look at the Dow, and then you're like, maybe not. Then look at the S&P, and it's like, no. Look at the NASDAQ, it's like, yeah, we are. But look at what's just happened with the NASDAQ. Yeah. It just doesn't feel to me like we're back out of the problems and we've got back into a bull market. I just get the feeling that this is going to stagnate for a bit. I don't think we're going to get back to the good old bull quiet regime for a while, because the market's been too spooked by this drop. This was too big, too fast, too hard. And I don't think we're going to get back into it. It looks like, if you look at it on a daily, from here, we're like high, low, just about made a new high, made a new low. And I'm like, right, well, that's bullish market structure. And then we were just about going to make a new high. We didn't. We pulled back. We tried again. We didn't. We pulled back. We tried again. We broke it. And I was like, this is it. Bang. 4 days drop. It just can't get going. It's like a spluttering car at the moment. When you look at what a proper bull quiet is like, it's so contracted, so orderly. This isn't what we've got at the moment. This that you're looking at here is not that, is it? Look at the size of the candlesticks. We're still massively volatile. These candlesticks are still very, very big. This ADR needs to contract before we get into that move, I think. When we get back into that, the US dollar is going to come down. but we're not at the moment. So somebody asked me actually about Robo Forex. It was Tim. When you sign up for Robo Forex, if you're in the UK, you can't sign up for a pound-based account. You can only sign up for either a euro or a US dollar-based account. So your base currency has to be one of those. And mine's always been in US dollars, always has been, just because the US dollar typically, when it gets the bit between its teeth and it goes. So with the pound US exchange rate, obviously, as the US dollar's rallying, I'm making more money on my trading income. When the US dollar drops, it makes sense to swap from a US dollar account over to a euro account because the euro and the pound should be more stable. However, that's history before Brexit. We haven't had a stable market since Brexit. So it's difficult to tell whether the euro and the pound are actually going to maintain that low ADR stability that we've been used to. So if you look at these two, historically, this is what we're used to. Yeah, this is going back to 2016. Yeah, that's normal. We get the odd bit, but we don't really go and deviate very much. We stay where we are. But since Brexit, we haven't had anything but what the hell's going on. The economy's crashing and all that sort of stuff. When you look at the pound US dollar, we get these much bigger swings. So it means I make more money when that's happening. Yeah, because I'm being paid in US dollar and US dollar is obviously rising. So the pound comes down, or no, the other way around, sorry. But you get much bigger swings. So it makes sense possibly to go and trade. If you can't trade in your own currency, look at the one that is the least volatile. I've never really thought of it in that respect before, but it kind of makes sense now to maybe do that. I don't know. I'll wait and see. At the moment, I haven't got a clue what's going on with the US dollar. So can't trade commodities though. So I might keep a bit in the other account for this. Yeah, if you want to trade commodities, Robo Forex, you can trade oil. But anything futures based, you can't. Any commodities, futures commodity based stuff you can't do. Whipping post. Forgot my question about the 10K account and 30K. Yes, I did. So basically, I learned a lesson when the Swiss franc cap was removed. I'm not going to have the US dollar Swiss. The cap was removed. I doubt. No, history go back that far? Well, it does. So this was the cap being removed on the Swiss franc, right? I was in this. I had a trade live on the US dollar Swiss when that happened. My broker, Alpari, went bust. Yeah, ADR on this is 70. This move is 18,555. So that's 1,850. So a normal ADR on this is 70. This did 1,850 pips that day. Yeah. My broker went bankrupt, basically. So when that happened, I basically had to go through the courts to get my money back. And I had all of my money in my broker at that point. And it was at that time, back here in 2015, it was only $5,000. So it wasn't the end of the world. This is nearly 10 years ago. So, but what it meant was I couldn't trade. So for 3 months, basically, I had to fund myself off my credit card. And that was the only way I could trade. And I could only trade with a smaller amount than I had lodged with the broker. So from that moment on, I said, no way I'm putting all my money in my broker, because if this happens again, I don't want to be able to be locked out of being able to trade. When I got better and started actually making a proper income from it, it was a case of if I put all my money in the broker and something like this happens or something else happens to that broker and I can't trade, I can't pay my mortgage. So basically at that point I said, right, I'm going to lodge a percentage of my money in the broker, but I'm going to trade as if I had it all in there. So I trade a 35K account, pound, that is. In dollars, it's more. So what I do is I put 10K in the account at 500 to 1 margin, leverage, which means basically I've got plenty of room. What it means is if there's anything catastrophic happens, that is all I'm ever going to have at risk. nothing more than that. And then if I need to, I will top it up with the rest of this. But instead of trading as if it's a 10K account, I trade it as if it's a 30K account. So where I would set up 0.25% risk on a half ADR, it's set up as 0.75% risk on half an ADR, i.e. 3 times what the actual balance in the account is. So it just means that if anything like that was to happen, I've still got 25K. I'm not out of business. I'm back in business straight away, next day. That's the only reason that I do it that way. And I do have to top it up every now and again. Every now and again, I get a squeeze and it's getting a bit too close to margin. So I put another 5 or 10 in and then I take it back out again. But what I tend to do, it's not often I need to do that, because what I now really do is keep that 10K. I grow that up to 15. Well, I've grown up to 25 and then I draw and then draw it back down. So I leave the balance to grow and then I withdraw out of it basically that way. So rather than taking a monthly income, you just take money when you need it, which is a nicer way to do it. Same with prop. Prop is done totally differently. Prop I'm taking out literally straight away, because you at any moment in prop, you run the risk of hitting that 5% by accident and you've lost it. So stop, take it out, be done, pay your bills with it. So that's the only reason. So that's why I do it that way. So if you've got a 5K trading account, for example, you don't have to put 5K in your broker. You can put 2K in your broker or 2.5K in your broker, leave 5K in your bank, safety net. If anything goes wrong, you need that money, you've got that money, but trade as if you have 5K in the account. So set up your lot sizing, your risk and everything to work off of the levels of the balance that you have available to you. If you've got 100 grand in the bank, brilliant. Don't put 100 grand in the broker, put 70 grand in the bank and 30 grand in your broker, but trade 3 times the leverage. That way you're never going to have all of your money at risk if something goes wrong. That's the only time I've ever had a black swan event in 15 years. That was it. Hasn't happened since. There's been crashes. There's been market drops. We've had 300 ADR days. We had one this week. But, from my perspective, and you can see a 300 ADR day in one day on the wrong side of it, it's not killing me, is it? So it's not the end of the world. You're just in drawdown. You've just got to have that available if you do go into a squeeze to be able to top your account back up. So the danger with it is, and it's a psychological thing you have to get over, which was tricky at first, but is you have to think of it as you have to try and not treat the profit that you make as the profit that is available to you, which is why one of the reasons why in the Trade Manager dashboard I have this. And this is why I do it. So the initial starting balance here, right, on my account is set at 35,000. Okay. So all of my trades in my Trade Manager dash and my P&L, they reflect what the actual percentage return is I'm making, because obviously on a 10K account, these with 3 times the leverage I should have, these are showing highly inflated figures. So that's the reason this is in here, this initial starting balance. So you can actually set what your starting balance is. You don't put it all in the broker. Yeah, that makes sense. That's why, that's the reasoning behind it. Purely just capital protection. Yeah, a businessman, if you've got a business that, if you're the director of a company and that company's making 10 million in profit a year, you don't take $1 million in profit out of the account each month as a salary, do you? You leave it in the company. Yeah. And when you're spending your money, you don't go, I've got 10 million to spend, I'm going to spend whatever. You just operate. You don't need to use all your capital, but you can trade the account as if. Same as these prop accounts, yeah? When you're trading a funded prop account that's 100 grand, you're not trading a funded prop account at 100 grand. You're trading a 10K account at 10 to 1 leverage, or a 5K account at 20 to 1 leverage. They're not giving you 100 grand. They're over leveraging your trading. Yeah. So it's exactly the same principle. It works. That's the way it works. And that's the reason. and because of the US dollar Swiss. And at the time, my mentor said, and he was totally right, don't trade the Swiss franc. I don't trade the Swiss franc. I'm never going to trade the Swiss franc because there's a danger of the Swiss franc going mental. I ignored him and I traded the Swiss franc. Now I know why. And that's how I understood what a peg was. And if you want to know what a peg is, go and Google it. Currency pegs. You want to understand how pegging works. There you go. National government, central banks fix an exchange rate to another currency. When they remove that peg, you die. So you just don't trade anything pegged. Hong Kong dollar and stuff, which is why people don't trade it. Head of large Republican caucus, a debt ceiling deal is likely by tomorrow afternoon. The Fed may be at or near a point it can pause rate hikes. Again, see what I mean? Now we're talking bearish. The other day we were talking bullish. This is just the Fed all over. Nobody's got a clue. This is why it's so volatile. It's just no one's got a clue what way this thing's going. So just be careful with this US dollar at the minute. Don't believe what you see on your charts. It's a squeeze, I think. Afternoon, Caroline. Tim, looking at the Swiss drop, it may not even have been that catastrophic. You could be making 2K per month on small stakes of around 0.03. That would have been just over a month's profit wiped off. Yeah, at the time, though, I was trading with stop losses. The problem was my stop loss didn't get honoured. And no, my take profit didn't get honoured. I was short. Just, can you imagine how excited I was? I was sitting in my office, right? I was working at the time because I wasn't full-time. I was working, sitting in my office, right? And I suddenly got a ping on the dashboard that I was using at the time. And my P&L went from, I don't know, whatever it was, but it went up to 3,000 something. And I was like, woohoo. So I quickly opened up the charts, looked at the charts and was like, oh, and I couldn't get a feed. The charts were frozen. Basically, I didn't know, but at that minute, that ping, Alpari went bust because that spike happened within minutes. You were there and you were there within minutes. There was absolutely no way any order from any broker could have got filled. The dark pools couldn't fill it, nothing. So basically, if you were in there and you had a stop loss or a TP there, you got filled down here. This is what I say. Black swan events, whether you have a stop loss or not, forget it. They're not getting honoured. There's no liquidity in the market. So, you know, I was looking at this thinking, and then when I finally got a feed off of the internet and I was like, that thing's come down that far. I was just trying to get into my account to get my P&L because I wanted to see how much money I'd made. Never found out because it never got honoured. So all they did was they gave me back the balance at time, and I had to provide a screenshot of my P&L to prove that I actually had money in the bank with the broker. This was 8 years ago. You know, there's protections and all sorts of safeguarding in place now to stop this sort of thing happening. I think it's not so much illegal to remove a peg without notice, but that's what the Swissies do. And look at what the Swiss did with the interest rates. They suddenly dropped an interest rate hike on us without telling us, didn't they? That here, this was the Swiss going, we're not going to increase our interest rates. We're not going to increase our interest. We're not going to, surprise. They do it all the time, the Swiss. And that drop there was the Swiss saying, actually, we're going to go up by 0.25%. Sorry, did we not tell you? Just happens. And that is kind of the equivalent of what a black swan is now. A week of catastrophic dropping, which wipes out 3 months worth of previous movement. But if you're position trading, worst case scenario, you might lose 10 to 15% of your account on that move. Oh, well, you've had a really bad month, but you're alive. That's the difference. Anywho, is there a trading balance on prop accounts? Is there a trailing balance on prop accounts? And do you then need to start a new prop account after withdrawing? Some, you have to look at them individually, Christy. Some there is, some there isn't. Some of them basically, if you start with 100K and you trade it up to 107K and you stop, and then you withdraw 7K back to 100K, some of them will say, okay, well, you traded up to 100K. This is for the scaling plan. We will honor that 107K. So when you trade up to 107K again, you're actually at 14K profit. And if they need 20K profit to scale your account, that's what will happen. Others, when you withdraw it, they reset you back to 100K. So you have the choice of keeping the money in there and scaling the account, or withdrawing the money and not scaling the account. Irrespective of what they say, I withdraw the money because at some point I will blow the account. Because the market isn't going to let me stay in the way that I trade for more than a couple of months. Just doesn't happen. 2 or 3 months maybe I last. That's it. And I'm out. I'm a statistic like everybody else. The 5% daily limit is the 5% daily limit. So, and if I don't hit that, I'll hit the 10% at some point. So, but yeah, check with each individual one. They're all different. Fed are clowns, as Brian just said. Yeah, exactly. US dollar yen, we've covered that already. It's pushing at the moment, but if it carries on like this, the yen will intervene and slap it back down again. It's extended on the daily, extended on the 4 hour, not quite on the hourly, but it's a good short at the moment. Brian, I was using a broker in Cyprus at that time. I didn't have Swissy position on, but when I went to log in the next day, website was gone. Yeah, and so many brokers went bust that day. I was with Alpari, and Alpari at the time, and probably still are, the largest broker in the world. Alpari UK, which was the UK arm of Alpari that I was with, literally went bankrupt in 5 minutes. They went from happy, profitable company making millions and millions a year to out of business in 2 minutes. All of your client funds are protected. So your money's fine. They just could not operate anymore. They were bankrupt because they have positions on too. And this is the problem with brokers. And we talk about this often in here. The A book and the B book, right? So with brokers, you are either on their A book or B book, and each broker kind of calls it a different one. But the principle is, with a A book broker, for example, they are taking the opposite side of your trade. So when you hit the long button, they fill the order short for you straight away by taking the short position, because they know that most retail traders are going to go wrong. They're going to lose the money. So it makes sense for them to take the opposite side of your trade, because if you're going to run your account from 1,000 down to 800 within a month, they might as well take the other side of your trade and take that 800 as well. The B book is where they literally, you are a profitable trader, and after a while they analyze you and go, actually, by being an A book client, we're losing money on this guy because he makes money and we lose money on the opposite side of his trade. They then put you over to an account where you trade normally, and they fill your orders out in the dark pools and with other brokers, and they only take the spread and the commission. This is why Alpari went bust. They were taking the opposite side of traders' accounts. And obviously, as these traders were short on that at the time, as I was, they were long on it. All of that liquidity that they had in on those long positions liquidated them. They just went bust. They could not fulfill the orders. They lost all their money. Yeah. Can you imagine putting, and this is what I was saying, you know, why are we talking about this? Imagine me putting 35K in on that day and pressing the long button on US dollar Swiss with a stop loss of 2% of my account. My stop loss gets honored 700 pips lower than the 50 pip stop loss I've put in. That is gone. Alpari make 35K. I lose 35K. Other side of the coin, Alpari lose 35K. I make 35K. The difference is they couldn't pay out because they were bankrupt. So anybody that made money on that day didn't make money. The only people that lost money was Alpari. They went lost. They just disappeared. And so did tens and tens of brokers around the world. They just all went, vanished. But they all started up again. Yeah. And this is why brokers segregate themselves. Like I said, with Forex, yeah, you go to Forex, the broker I use. You go onto their website and it goes, hello, you're in the UK. You're on the wrong website. You need to be here. This company goes bust. That company is unaffected. That company goes bust. That company is unaffected. They have multiple companies in multiple countries regulated by different regulators, so that if something like that happens, Alpari UK go bust, Alpari carry on trading. And Alpari are still trading to this day. Yeah, biggest broker in the one of the biggest brokers in the world. Still going, but not my Alpari. Alpari UK gone. Just be careful with your money. You're basically depositing your money into an account, and when you sign your contract with your broker, if you read the contract you sign with your broker, you would stop trading. You are honoring your broker. You are authorizing your broker basically to execute an order at any price they deem fit and achievable in the market. So when you press the buy button, if they don't fancy filling you there and they fancy filling you 25 pips higher than you asked for, i.e. you go into 25 pips of drawdown on pressing the button, they can. Legally, you've signed a contract to allow them to do that. Again, don't trust brokers. Most of them are really good, really honourable, and they're all regulated. If they start mucking about like that, they will get fined and they'll get kicked out. It costs £250,000 to set up a brokerage. Yeah, they don't do this and then suddenly try and rip everybody off. It costs a lot of money. They've got to make at least £250,000 back just to cover the cost of starting their business. So, but at the end of the day, their business is making money out of traders. And every time you press that button, whether you press that one or that one, they make a spread and commission at the very least out of you. So they're after you pressing that button. If they can stop you out and make you press that button again, damn right they're going to do it. Imagine every time somebody presses a button on a piece of software, you earn $1. And if you can make them press the button 10 times a day instead of 1 time a day, you're making 10 times the money. What would your incentive be? Make people press buttons. I know, let's teach them how to put trades in the market with a stop loss. Why? Because a stop loss stops you out, makes you press the button again. People don't realize how this industry works, and it's horrible. But that's it. That's how it works. And yet the Swiss is considered a safe haven. It is now, Whipping Post, because the Swiss is now no longer pegged. The Swiss is a safe haven now because it's not pegged to another currency. It's its own entity. And this is why the Swiss got unpegged, because there was so much money going through the Swiss banking system by very rich people. They wanted control of their own destiny. They took it back. They just didn't tell us it was happening. Anybody. So they knew what was going to happen. It was pegged at $1. And every time it batted into that dollar, it bounced off because it had to. They then removed that peg and it went above it. And everything went, it went wrong. Life. Fedor closes after 30 days, reviews, then issues a new MT4 login. Does it? What, with the funded accounts? I didn't know that. I use Admiral Markets. Yeah, Admiral are good. There's loads of good brokers out there. I got a guy from this company approached me today, wanting me to be a partner for them, Vantage FX, Vantage Markets. They've been around a long time, decent broker. I've never used them, but they asked me to be a partner and start promoting them. I'm not going to, but there's loads of brokers out there. You take your pick. Just don't stick all your money in them. Stick most of it in, or some of it, or half of it. 125 Aussie New Zealand. Still pumping. New Zealand's still dropping. Is IC Markets good? Yeah, IC are very well established. Very big. There's no, just pick a big broker. You won't go far wrong. The more liquidity there is in the broker, the less shenanigans happen, the safer you are, basically. Right, I'm going to leave it there because I've got to disappear off. Got a birthday party. So I'll be back tomorrow morning, 7:50 and 2:20 tomorrow afternoon. These markets aren't going anywhere. Stopped out on the S&P short in profit. So good profit. Consider I mucked about on that and lost $4,500 in testing. Still made $7,000 in the actual trades. Would have made more than that if I hadn't have lost it. So good 11, 12K day that was. Might try that again tomorrow, running those at the same time. See what happens. So I'll be back tomorrow morning. Anything you need, come in the Telegram group. Otherwise, I'll be back tomorrow and we'll have a look at how everything's going. Keep your eyes peeled overnight for the yen. So we've got the CPI for the yen tomorrow morning. Retail sales ahead of the Frankfurt Open for the pound as well. But the only other news really we got tomorrow is PCE. That will or won't do anything. You just have to wait and see. They may come out and put a little bit of a speech behind it. If they do, that might rally the market one way or the other. They are thinking about interest rate changes, and obviously CPI is the core driver of interest rates. So you never know. It will just happen. You'll wake up one morning and obviously there'll be a 200 ADR move on the yen. We never know. All right, so anything you need, let me know in the Telegram. Otherwise, I'll be back tomorrow, and have a good afternoon. I'll see you guys then.